how you see the next 12 months to 3 years going with the economy.
Well, I mean, first of all, it's hard to know exactly how long we can get away with this. I mean, we're going to try to get away with it as long as we can. At least that's what the government's going to be doing. And so the reality is, though, the United States had a very weak economy before COVID. That's why it was so susceptible to COVID, and in particular to the way the government went about, restricting the economy in the aftermath of COVID. But the U.S. economy is in even worse shape post-COVID, based not just on COVID, but on the government response. All the spending, all the debt, all the money printing has made a weak economy weaker. But the way a lot of people look at an economy, they don't understand the inherent weakness, because they see all this money being spent and they assume that, oh, we must have a strong economy because look, we're spending all this money. But strong economies are not defined by consumer spending. It's defined by the production of goods and services, right? A strong economy is one that is able to turn out more output, right? It can produce more goods and services for consumers to buy. That's not what we're doing. And in fact, if you look at our trade deficits, our merchandise trade deficits, they've gone off the chart. We've never had deficits this size. And that's because the economy is too weak to produce the stuff that we're consuming. And the way that Americans are getting their money is not because they're earning it, but they're just getting checks from the government. And the government just prints the money. They don't produce anything. They just print money and give it to Americans. And Americans are spending it. Also, because money is so cheap, there's speculative manias everywhere. I mean, there was already bubbles, and now the bubbles have just gotten even larger. So you have an economy defined by excess consumption, financial bubbles, all made possible by the Fed. But the only thing that is enabling the Fed is the willingness of the world to hold on to US dollars and dollar-denominated investments. And that's the key, because the party is going to end when the dollar cracks. When people decide, and institutions around the world, we don't want any more of this paper. We're not going to keep sending our stuff, our manufactured goods, our resources to the United States to keep its economy going in exchange for pieces of paper that you're just, printing, and that you're going to continue to print in greater and greater quantities. And so that's what's going to bring an end to it. So the question is, how much longer? And that I don't know. I mean, will it happen in the next year? Will it take 2 or 3 years before the dollar crashes? I don't know. But I do expect the dollar to gradually decline relative to other currencies up until the point where it crashes. I do expect foreign markets to outperform domestic markets, and investments that are particularly sensitive to inflation to be among the best performers, which would be resources, the mining stocks, industrial metals, agriculture, raw materials. And I would expect the emerging markets to begin to outperform the developed markets, in that I think those economies will benefit more from a weak dollar. And I think on a relative valuation basis, stocks in the emerging world, to me, look a lot cheaper than the stocks in the developed world.
A lot of my subscribers are going to be really happy, and my clients, with what you just said, because those are exactly what I've been recommending that they get into. And a lot of it, I don't know, much about Maslow's hierarchy of needs and all the different models, but I've been saying to my clients, you really need to be getting in. Stop looking at all the middle tiers of Maslow and start looking at the fundamental human needs of what people are going to need as we come into this crisis. But don't just focus there, which of course is agriculture and the metals and the mining and all the other things, and energy as well. Don't just focus there, but also look at this K-shape that we're having. It's crazy. I was talking about this last week. I was in the Rolex shop last week, and I was speaking to the manager there here at the, it's in the Wynn here in Las Vegas. And I was speaking to the manager, and he said, we're just shocked. Even head office is so shocked. We've sold out of all of our watches. Next door's sold out. And I said, why are you guys so shocked by this? Obviously, with the rich getting richer and richer, and they're looking to park their money, surely you must have known they were all going to come in and buy a lot of assets here. So I'm glad you've said that. I'm going to come back to one of the points that you mentioned in another question, actually, because I just want to touch upon that a little bit more. So I was listening to some economists, which will probably make you laugh, over the last couple of weeks, and they're saying we're experiencing now, this on the MSM mainstream media, this new era, this new economic boom era. And I'm waiting for the interviewer to say, can you explain where this money is coming from? They never do. So obviously, I'm assuming you agree with me. This is just a fake boom right now.
Well, of course, it's not a boom at all. I mean, if all we had to do is print money and that would create a boom, why wait for a pandemic? I mean, just print it all the time, right? Why do we have to wait for a disaster to have an economic boom if booms are simply the consequence of government printing money and spending money? And if that worked, I mean, why didn't it work in all these other countries? That have done it. Look at all the other countries that have printed even more money. They didn't have booms. They had hyperinflation.
Yeah.
So everybody is confusing inflation for economic growth. But again, the only reason that it looks possible is because the US dollar is the reserve currency. We're able to get away with it. We're able to print money, and the rest of the world is producing this stuff that we're not producing, and they're willing to exchange their real goods for our paper. But they only do that to the extent that they're confident that that paper is going to have value in the future, so that then when they want to buy something, they can do it. But when you start to look at what we're doing, and the idea that, wait a minute, we're never going to balance our budget again. In fact, we're now convinced we don't even need to ever balance it. The government right now is, I think, borrowing $3.50 for every $1 it collects in taxes. I mean, 70% of what the government is spending is borrowed and printed. And we now believe that we can have whatever we want and not have to pay for it. And we have a huge laundry list of socialist programs that are queued up to be enacted. And when our trading partners think about this and like, hey, the US national debt is now 28 trillion. Next year, it'll be 30 something trillion. 40 trillion, 50 trillion, 100 trillion, right? The balance sheet, the Fed's balance sheet is now almost 8 trillion. It's going to go to 10 trillion this year, maybe more, 15, 20 trillion. At what point, does this whole thing implode? And when people start to factor that in, they're not going to wait for the collapse. They're going to want to get out before. So once they actually can read the writing on the wall and see where we're headed, that there's no more fiscal discipline at all, that we're just going to print the dollar until it crashes, well, it's going to crash a lot sooner, because now the people who can figure this out are going to want to get out of the dollar, and at some point the bottom drops out. But I wanted to mention your point about the Rolexes, because I did notice this. I mean, I would look online and you could see the prices of, because I had bought another Rolex a couple of years ago, and I bought it new, and the used ones are a lot more than what I paid for a brand new gold Rolex from Rolex. I can't even find them, and just finding used ones are more than I paid for a new one. And I think part of the problem for them is that there was a big drop in production due to COVID. A lot of companies have had this situation where they haven't been able to produce as much product because a lot of their workers weren't at work, and there were bottlenecks in the supply chain. Meanwhile, the correct monetary policy for all central banks was to shrink money supply, because when you're producing less stuff, you need to print less money. But we did the opposite. We were producing less stuff, and all the central banks were printing more money. So more money to buy stuff, but less stuff to buy. So prices can only go up, but it's not just Rolex watches. Prices are going up for everything. I mean, look around. Now the central banks are telling us, particularly the Fed, oh, don't worry about it. It's transitory. How the hell do they know that it's transitory, and why should it be transitory? But these are the same guys that told us not to worry about subprime in 2005 and 2006 because they said it was contained.